Asia high yield debt was one of the best performing sectors in global fixed income even before the China stimulus announcement.
So, Shamaila, talk to us more about this. There was a time not that long ago, right, when we said Asian high yield, we actually meant Chinese high yield, by which we also meant Chinese property developer high yield, right? You like China high yield debt right now. Is that what you mean?
That is what I mean. I will go out there on the record to say that.
As long as it's dollar paper.
As long as it's dollar paper, and you have to be selective, right? There are areas where we don't think that offer a lot of value, but if we are sectors that we like a lot, like distressed China real estate bonds, where a lot of risk has been priced in. We like convertible bonds. We like Greater China bonds, particularly some Hong Kong credits as well. And that's the important thing. You have to be selective in this sector, but we have been on the record saying we like China high yield as part of Asia high yield for a very long time.
So give me a sense of what kind of yield are you getting right now? And is this just for the yield? Because obviously, if you hold a maturity mark to market, I'm not so sure.
It's not just the yield. Yeah. There's a lot of capital appreciation potential in the distressed real estate sector. There's capital appreciation potential in a number of the other credits that we like. The yields are attractive as well at double digits. So, it was returning double-digit returns. Even higher, depends on which bond you're talking about. So these are, again, there was so much negative sentiment priced into that sector.
So this is very contrarian. I like this, right? It all spices things up. But how do you separate the wheat from the chaff? How do you know? How much of it is tied to what authorities are set to do, about to do, or people hope they will do in terms of stimulus and support for the economy, for local government debt as well?
Yeah. Well, being in the weeds is our specialty, right? We are going to be doing really extensive work, and that is why we identified this as an opportunity. I think the market is very misplaced in terms of looking at China's stimulus. They keep looking for a big number. That's not what we're looking for. What we're looking for is consistency and execution. And we've actually seen consistency from the policymakers since last year. They have been injecting more stimulus in the economy in a very slow and measured fashion.
Is it really stimulus, or is it just stability or support?
So stability and support is, I have to tell you, not priced into these assets. The idea of stability and support can provide significant upside potential because so much bad news was priced into these assets. The technicals were very positive. Valuations were and are still very attractive. So we're not looking for big bazooka kind of stimulus. We want them to be consistent in applying stimulus, which, by the way, from my perspective, having covered a lot of countries in the world, is the right way to do stimulus. So I do agree with the policymakers, but we need execution. We need it to be executed well so that it continues to provide sustainable upside to the market.